SEC gave the green light to Bitcoin Spot ETF. It's really breaking news for this week. In today's video, we're diving into what the Bitcoin Spot ETF is and how it's different from Bitcoin, and why the news is a total game changer, and what the SEC's approval journey is, and what are the benefits for small investors and the hidden risks that those online articles or YouTubers didn't tell you. If you're new to my channel, my name is Charlene. I believe financial freedom starts with financial literacy. Let's get started. What just happened? The people in charge of money rules in the US, called Securities and Exchange Commission, or SEC, have said yes for the first time to special funds that let you invest in Bitcoin, a kind of digital money. This is a really big deal because it means more people can easily buy Bitcoin. I'll tell you how you can do it later. They give the green light to big companies like BlackRock, Invesco, and Fidelity, as well as some smaller ones like Valkyrie, so they can start selling these funds to all kinds of investors. The decision is surprising because the people in charge didn't agree with this idea for over 10 years, but they changed their minds because some important things happened. A company, Grayscale, went to court and argued with the commission after it said no to their plan for a Bitcoin ETF. After a tough court battle, the judge told the commission to take another look because they didn't have a good reason to say no. And what is a Bitcoin Spot ETF and how it's different from investing in Bitcoin? A Bitcoin ETF is like a special investment fund that allows you to buy shares in a big pool of real Bitcoins. It's a bit like joining a group of friends who put all their toys in one big box. And when you buy Bitcoin ETF, you're getting a piece of that big toy box, which is filled with actual Bitcoin. The term spot refers to the actual purchase and ownership of Bitcoin in its current form, rather than through futures contracts or derivatives. Put it simple, the term spot in Bitcoin Spot ETF means you are buying and owning the real Bitcoin. It's like getting the actual toy, rather than other ways like getting a picture of the toy or a promise to get the toy later. With the spot ETF, you have the real thing right away. And really quick before we continue, if you enjoyed this video so far and you find it helpful, all I ask for in return is that you can hit the like button or subscribe. It helps the entire channel tremendously. I will do my best to respond to as many of your comments as possible. And then you may ask, how is different from buying direct Bitcoin? I summarize 4 key different areas. One is on ownership and control. When you buy Bitcoin directly, you get to have your very own toy. It's like having a toy in your room that you can play with anytime you want. But with the Bitcoin Spot ETF, you're more like a member of a club where everyone shares toys. You don't have direct control over the special Bitcoin you own in the fund, but you have a little bit of everything. 2 is about ease of buying. Buying Bitcoin directly is a bit like going on a treasure hunt. You need a special place called a crypto wallet to keep it safe, and then you have to find someone who wants to sell their Bitcoin to you. On the other hand, buying Bitcoin Spot ETF is as easy as picking up candy from a store. You can just do it during the day whenever you want. 3, no crypto accounts needed. With Bitcoin, you need to set up special accounts and wallets, which can be really complicated. These accounts and wallets help keep your Bitcoin safe, but not everyone wants to deal with them, right? With the Bitcoin Spot ETF, you skip all that hassle. 4, reduce risk. Owning Bitcoin directly comes with risks like the possibility of losing it if you don't store it securely, or the exchange you use get hacked. Gosh, there were a lot of similar news recently, right? Different scams, scandals. But with Bitcoin ETF, you still benefit from Bitcoin's price going up, but you don't have to worry about these risks because of the fund manage them. So in simple terms, a Bitcoin Spot ETF is like a joining a club where you share Bitcoin with others, making it easy to buy and manage. Owning Bitcoin directly is like having your very own toy, which you can control and use as you wish. Both options have their pros and cons, so it depends on what works best for you and your investment goals. And now let's go back to the news that SEC approved Spot Bitcoin ETF. Why is such a big deal? Firstly, it's like a game changer because it's something that people have been working on for a whole decade. Imagine you had a puzzle that you've been working on for 10 years and you finally figure it out. That's how big it is for Bitcoin. And now let's talk about why it's a game changer. 1, it's really about the easy access for everyone. Before, if you want to invest in Bitcoin, it was like going on a complicated treasure hunt, like I said. But now with the Bitcoin ETF, it's as simple as buying a toy from a store. It's like saying, I want some Bitcoin, and you can get it just like that. No more hard stuff. Two is about safety and supervision. You know some playgrounds can be a little bit wild and not very safe, right? Well, the world of Bitcoin has some trouble too. There are people doing not so nice things. You see the news, right? Scams, money laundering, bankruptcy scandals. But with a Bitcoin ETF, it's like playing in a well-supervised playground. There are grown-ups making sure everything is safe and fair. Everyone can join, no matter if you're a small or big investor. So this is biggie. The third thing is really about the potential inflow. Potentially millions or even billions could flow into those ETFs, potentially driving the price up. For example, sources indicate that BlackRock is preparing to invest $2 billion for the launch of the spot Bitcoin ETF. This is probably just a start. And what's the SEC approval process and why it took so long? For over 10 years, many asset management firms tried to get Bitcoin ETF approved starting in 2013, but SEC, they just keep saying no. And there are three big reasons why it took so long. The first one is about cheating concerns. The SEC worries that just like some kids cheat in games, there could be people trying to cheat in the Bitcoin game. They want to make sure that the prices of Bitcoin are not controlled or manipulated unfairly by a few people. This is important to keep the market safe and fair for everyone who wants to invest. The second thing is really about Bitcoin roller coaster. Bitcoin's price goes on a wild ride, going way up and then crashing down. Bitcoin gained 60% in 2021, lost 64% in 2022, and more than double in 2023. The SEC is concerned that this could be too scary for regular people who just want to invest their money safely. They want to make sure that investing in Bitcoin won't be too risky for people, especially those who are not used to such big price swings. And the third reason is about missing information. It's a bit like having a toy without knowing who it belongs to or where it came from. The SEC wants to understand more about Bitcoin and make sure the people who create Bitcoin ETFs have all the right information. They also want to make sure there are properly rules and systems in place to prevent fraud, just like how teacher watches over, a test to make sure nobody cheats. This helps protect investors and keep the market safe. How can you invest in Bitcoin ETF and what are the upsides and more importantly, the downside or risks for you? Investing in Bitcoin ETF is as easy as buying candy from a store. You go get a brokerage account, choose the ETF, click buy button, and then it's done. Very easy. And if you don't know how to open a brokerage account, leave me a comment below. I will consider doing a step-by-step tutorial. And we talk about so many benefits and opportunities. Never forget about the risk. High risk, high return. Always remember this. And SEC Chair Gary Gensler said in a statement, is that, we approved the listing and trading of certain spot Bitcoin ETP shares today. ETP, they use ETB instead of ETF. We did not approve or endorse Bitcoin. Investors should remain cautious about the myriad risks associated with Bitcoin and products whose value is tied to crypto. So yes, Bitcoin has risks and Bitcoin ETF are also associated with high risk. I summarized into three key areas. The first one is about price volatility. Bitcoin's price can be like a roller coaster ride. It can go up a lot, but it can also come down very fast. So no matter if you invest in Bitcoin or Bitcoin ETF, the price volatility is something that you cannot avoid. The second thing is about fees. When you invest in a Bitcoin ETF, you usually have to pay management fees and other fees for you to be part of the investment club. But over time, they can eat into your overall profits. So it's important to keep an eye on those fees to make sure they don't add up too much and reduce your gains. And the third one is about lack of control. When you own Bitcoin directly, you have control over it. It's like having your own toy to play with whenever you want. But with a Bitcoin ETF, you are more like a member of a club and someone else manages the Bitcoin for you. You cannot use it directly or like things like buying stuff or transferring to your own wallet. So you can probably buy an iPhone with Bitcoin, but you cannot do it with Bitcoin ETF. So if you want to have full control over Bitcoin, the Bitcoin ETF may not be the best choice for you. The news SEC approved spot Bitcoin ETF is positive, but remember not to put all your eggs in one basket and always be aware of the risks. If you're serious about investing in 2024 and want to learn a proven way for beginners to get started, I got you covered. Like, subscribe, and click on the video on the screen. I will see you in the next video.